Today I will give advice on how to make financial report for micro, small, and medium enterprise. Before knowing how to make it here, I will explain the definition of financial report. A financial report is a report containing financial information regarding a business entity that will be used by interested parties as material for consideration in making decisions. The objective of financial report is provide information about the financial position, financial performance, and cash flow statement of entity that is useful a wide range of users in making economic decisions by anyone who is not positioned to request specialist financial reports to meet special information needs. In fulfilling its objective, financial report also show the management has done or management responsibility for the resource entrusted to it. There are 5 ways that we will discuss in how to make simple financial reports. Number 1, create an expense logbook. Number 2, create an income logbook. Number 3, create a master cash book. Number 4, stock book. Number 5, got inventory. Okay, number 1, create an expense logbook. When starting a business, you should first consider making a separate book specifically for recording expense. Keep a record all expense starting for the purchase of goods to clear expense. In this way, it will be easier to find out how much business capital has been issued. Number 2, to create an income logbook. Not only expense, all matters relating to the income of money also need to be recorded clearly, including the process from the sale of goods to account receivable that have been paid. Try to record this income every day. This is make easier to make monthly reports. Number 3, create a master cash book. The main cash book is a combination of income and expenditure record books. The market is intended to find out more details regarding the amount of loss and profit of the company. Apart from that, the main cash book can also be used as a basis for planning the company future strategy. Number 4, stock book. Company do not only record money matters but also goods. Recording of incoming and outgoing goods must be done continuously and every day. Logically, if sales are high, to flow in of incoming and outgoing goods should be also be higher. These inventory books can also be used to monitor the amount of inventory owned by the company. In addition, this book is also useful for avoiding fraud that is sometimes carried out by supplier or company employee themselves. Number 5, good inventory books. This book is used to record all the goods owned by the company, both those that have been purchased and have been taken care of. In addition, this book can also function to keep company assets under control.
First, asset. Assets are divided into 2 mainly. First, current asset. There are 3 parts to current asset. First, cash and cash equivalent is 20 million rupiah. Second, inventories is 8 million rupiah. Third, equipment is 2,500,000 rupiah. And total current assets are 30,500,000 rupiah. Second, non-current asset. The non-current asset portion is property and equipment, not of accumulated depreciation amounting to 3,187,500 rupiah in 2022 is 40,312,500 rupiah. And total non-current assets are 40,312,500 rupiah. So that the total assets are 70,812,500 rupiah. Next, liabilities and equity. First, liabilities. The liabilities section is trade payables. But here it is zero because there are no trade payables. Second, equity. There are two parts to equity. The first capital stock is 62,500,000 rupiah. Second current year earning is 8,312,500 rupiah. And total equity is 70,812,500 rupiah. So that the total liabilities and equity is 70,812,500 rupiah. And we need to be considered is that the total between asset, liabilities, and equity must be the same. If they are not the same, it means there was an error in filling out the balance sheet.
Next, Ayam Geprek Jogja income statement at December 31, 2022. Revenue Ayam Geprek Jogja is 20,255,000 and the total gross profit is 20,255,000. Operating expense Ayam Geprek Jogja, there are 4 parts. There is 1. Salaries and wages expense is 6,500,000. 2. Water, telepon, electricity expense is 1,500,000. 3. Depreciation expense is 3,187,500. 4. Equipment expense is 755,000. And the total operating expense is 11,942,500. And the grand total net profit Ayam Geprek Jogja, the amount of gross profit is reduced by the amount of operating expense is 8,312,500. This is example for statement of change in shareholders' equity. Share capital in that year amounted to 62,500,000 rupiah. Then there is a profit of 8,312,500. So that the total is 70,112,500. This example for cash flow statement. Cash flow statement means a financial report that presents cash inflow and cash outflows from a company. Cash flow from operating activities, there is a net profit and license of 8,312,500 rupiah. Adjustment for reconcile net profit to net cash provided by operating activities, there is depreciation fixed asset of 3,187,500 rupiah minus the change in operating asset and liabilities, which is 8,000,000 and 2,500,000, and the result is net cash provided from operating activities of 1 million. The total net increase in cash and equivalent was added to the cash and cash equivalent at the beginning of the year of 19 million. So the total cash equivalent at the end of the year was 20 million. The point is the result of cash and cash equivalent in this cash flow must be the same as the total cash in the balance sheet.
Okay, thank you for your listening. My all thoughts we have shared be beneficial for all of you. Bye bye.